As we brace ourselves for the 10% tariffs on the whole world and 145% on China, we need to ask ourselves, who can pass these new costs on to their customers? Who's going to be forced to swallow it? Ultimately, someone has to pay the bill, right? And now every business involved is trying to make sure that it's somebody else. To figure out who has the ability to make that happen, I'm going to check in with HundredX. That's a privately held alternative data firm with real-time feedback from actual customers on more than 4,000 brands. They understand who has pricing power better than anybody because they're asking regular people about their purchase intent rather than just looking at historical data. So let's take a closer look with Rob Pace. He's the founder and CEO of HundredX. Find out what he sees. Mr. Pace, welcome back to me, buddy.
Yeah, thank you.
Well, I got to tell you, this survey was so great because everyone says, oh, I think they have purchasing power. I think that guy has it. I think that guy's got the right. You actually have data. So who has got the pricing power in America? Name me some companies.
Well, at the top of the list is Costco. You know, we've talked about Tractor Supply and TJX, and there's 20. We have 20 brands. We have 4,000 total, but we called out 20 of the largest. And here's let's step back. What is pricing power?
So yes, let's go over that.
You know, the technicians talk about elasticity and things like that.
Right.
I have a much more simpler definition. Okay, you're my customer. I'm a business. Can I raise prices and still be your best option, including if it's a discretionary category? You don't have to buy. So when you put it through that lens, it becomes clear you got to listen to the customer. And it's all relative. It doesn't happen in a vacuum. And so that's what we focus on, is who has that across all industries.
Okay, so give me the difference. I mean, it's somewhat, I think our viewers may understand, they got it in their heads, but the relationship between price and value, and what's it driven by, and give me some outliers.
Yeah, so we studied what actually predicts pricing power. And with the past period of inflation, we had a pretty good laboratory to look. What we found is there's actually 5 things your viewers should look at.
Okay.
First, pricing power, obviously price. But second is non-price. Do they do the most important things well? Quality, taste, convenience, et cetera. And that leads to value. Value is not price. It's the combination of price plus the most important things. And that's what people need to look at. Plus, we found a couple other wild cards that we'll discuss as well.
What I do want to know is, like, when I see something like Texas Roadhouse, and I think that, and I happen to like Texas Roadhouse, that I think $10 meal that tastes good.
Yep.
I mean, is that? But they're not charging you 20. They're charging you 10. I mean, so to me, that's just value, and you're paying a decent price for value. Stock has not been terrible, that great, but we're not going to talk about the stock. You're saying that these guys say, could they raise the price to 12 for that $10 meal?
Yeah, yes, and here's why. So when we look at every metric, they outperform on price, but exactly what you said, taste, portion size, and attitude. So they provide a superior value. So you put that together and relative to the competition, and that's how we look at it, relative to 200 other restaurants. Do they have the ability to raise price? And in our data, they do.
Well, but is it circular reasoning in the sense that the reason why that people like them is because they don't raise price?
Well, they have taken prices.
They have taken they've taken minor prices, but
right. But at the end of the day, these companies are all going to be hit, exactly what you said, with increases, and some are going to have to eat it, and it'll all go to the bottom line, drop to negatively the bottom line, and some will be able to pass some of it through.
Well, let me ask you the most complicated question I find right now: is there a price that the iPhone gets to because of the tariffs that makes us all switch to Samsung?
We've spent a lot of time looking at the iPhone. So, and this was a very important insight. So one of the things we found, Jim, was it's not just price and value, because in our data, the iPhone is like negative 40% on price because it's a premium product.
Right.
But the value scores are still negative. But the spread between price and value is so big. In other words,
they make it. To me. I don't get it.
So if their price score is very negative, but they make up almost all of it in our data with the value, that spread tells us that they have some degree of pricing power. So in our data, the iPhone has above average pricing power. Do they go to 2,000? No, but do they have some pricing power? Yes, is what our data would say.
All right, that's important because I believe that at a certain point, if you don't give Apple some sort of break, and people tack on, say, 300, 400, there's got to be some price where people just say, you know what? I have to say no, let me try a Samsung. Maybe they have a good experience with Samsung, and that's the end of the aura of Apple.
Yeah, and certainly also the upgrade cycle due to AI gets postponed. at a minimum, right?
Right.
People just hold on to their product longer.
Right, that's right. That's what they could do. Now, when I see Tractor, I happen to like Tractor Supply. I go there. Tractor Supply is now run by someone from Macy's. It's got what I regard as being a great clothing selection for people who don't know what outdoor people look at. How did this company get on your list?
So look at the factors. They are plus 25% versus specialty retail in terms of price feedback, but they also do availability selection because they get their customer. So they really get their customer, and it's whether it's pet or other things, they do a good job of aligning with the customer, and that makes them sticky.
That's fascinating because when I look at them, I think, when I go to one, I went on 202 in New Jersey, I'm shocked that they have what I want. And it's Hal Lawton, who used to be at me. I said, how do you know? But there's a bit of an intuitive nature for some of these situations. Southwest had a certain way of doing things. It's still up, but they've changed their model. Is that going to be okay?
Well, we'll see. Here's what our data says. Their purchase intent, which is our key metric, last month is down 1%. So they're starting from a high base.
Right.
But we haven't seen the baggage chart changes flow through. That's in May. So we're going to watch very carefully. Where companies get slammed is when customers are moving away and they raise price. That's one of the big insights that we found in addition. It's almost like your position heading into a stock. Are people moving away? And so having a view of that future purchase intent and then understanding that was one of the key discoveries as we did the analysis.
One last question, staying on Southwest. I am a huge believer that everyone thinks that it's free. We give them the bag. The day that it's not free, right now, the people behind the counter are suddenly ambassadors for a system they had nothing to do with, and everyone's angry at them. And then it reverberates, and by the end of the day, they're angry too. I mean, it's got to be a public relations disaster the day that it occurred. That people have to switch.
Well, what we saw, as you know, they've also changed the seating. We saw in our data that was a smart move. People actually didn't like that legacy system. But their baggage scores are over 50 points higher than their competition.
They are?
Yeah, and that's a big part of their value proposition. So what they have to watch for is the double whammy. If they change baggage and prices happen, they could see a lot of migration away.
Wow. Okay, we're going to watch that closely. And we love these because we're at the cusp of some major price changes, and no one knows. You've given us the heads up, and I really appreciate it. That's Rob Pace, founder and CEO of HundredX, with some fascinating data exclusively for Mad Money. Thank you so much, Rob. Mad Money's back after the break.
Coming up at the end of another tough week, looking for some green? Cramer's eyeing the fairway to see if an investment could be a hole-in-one for your portfolio. Next.